So it was another disastrous session for the stock market, which exhibited resolve for most of the day. The Dow, in fact, was actually up 150 points before buyers vanished and, well, sellers stepped up to the plate. And then that selling quickly went from a trickle to an avalanche. Now, there are lots of reasons out there, of course, for anxiety, including recent signs from the bond market that keep flashing a potential recession is around the corner. These developments wrecked the financial sector. In fact, those stocks hit harder than any over the last two sessions. There's also the Facebook fiasco. The biggest loser of the week really saw things get worse after the House Energy and Commerce Committee officially requested company founder Mark Zuckerberg make a trip to Capitol Hill. They want to hear from him. Without leadership now from financials or tech, the stock market, well, has become a rudderless ship. Now, American companies with large exposure to China, of course, this week took it heavy on the chin, whether it was Deere, 3M, both down 9%, Caterpillar down 7%, Apple down 6%. So we have finished this week with the blue chip Dow Jones Industrial Average in correction territory. This is the worst week for it, in fact, since January 2016. But you know what? If you remember, that was the sell-off that came after Janet Yellen stood up to Wall Street and raised interest rates. That sell-off, though, got her mind right, and she played ball for the rest of the term. I point this out because I think all of the selling that we're seeing right now is manufactured by Wall Street to force President Trump to blink on the so-called trade war. Note the Dow Jones Industrial Average, it lost 1,100 points in only 4 hours of trading. 2 hours today, 2 hours yesterday. Into the close, no news. In fact, in the absence of leaving a severed horse's head in the White House bedroom, the titans of Wall Street willing to sever this rally to send the same message. Here's me now to discuss. Lee Munson, Chief Investment Officer at Portfolio Wealth Advisors. All right, no severed horse head, but we have the rally's been severed pretty good here. Oh, yeah. What do you make of it?
I think that ultimately this was a great excuse to retest those February 8th, February 9th lows. You'll notice today, Charles, that we did not end lower than we did back in February.
For the S&P.
For the S&P. Right. I know about the Dow, and let's just like cover it up under the. Here's what I'm thinking. A lot of bark, not a lot of bite. The tell that this is just Wall Street retesting a low, Century Aluminum. You see that yesterday, it went down 20%. They were the big lobby group, this aluminum company. They were saying, we want the tariffs. JP Morgan last week was saying this thing's going to double, go to 29 bucks. Then when they started talking about exemptions, who's going to be exempt, the stock started to tank. So I think for investors out there, this is a good cautionary tale that it's still about earnings. I definitely agree, lower corporate tax rates are helpful, right. But if you're trying to play this market based on what you think Trump's going to do tariff-wise, it's a bad trade.
Well, what do you make of it? And I agree with you. U.S. Steel, another example, it was almost 46 bucks on March 2nd. Yeah. Now it's like $34. We actually took profits into this to the buying, and some of my friends have bought the stock because they're excited and they're hiring, and that's the headline stuff. Yeah. But I think people do become frustrated when headlines can send a market down, but strong fundamentals have to work hard to push it up. It's just sort of the stair step up and the elevator straight down. That's a frustrating scenario to be in.
But that's what you and I love about markets, because that's what makes my job so easy, because we know that stocks creep up, shoot down, just the way that gold, does the very opposite. Bonds do the opposite. I think people need to look at this as a gift from Wall Street to say, if you didn't buy in February like I was, right? You can buy here at almost the same level. But that's natural for markets. Or else, when are we going to have buy points? When are we going to rebalance?
Let me ask you before we wrap this up then. What's your biggest concern going into next week? Are there some key support numbers? There's some key news? Okay, what are you looking at?
Okay, hey, we were 7 points away from making a lower low on the S&P. I admit I'm very bullish right now, but I was sweating bullets near the close. I do not want to see a close, say, below another 10 or 15 points on the S&P right now. The place where I would buy, if I'm wrong and my optimism is misplaced, 2,500, 2,480 on the S&P. I like small cap value. I think you wait for REITs to come down more. And remember, they talk about 3 rate hikes. Charles, 8 of the Fed governors said only 2, only 7 said 3. So I think the odds are in the bulls' favor.
Right. All right. Lee Munson, you're the man. Thank you very much. Appreciate it.